Hello, this is John Piper with the weekend video clip, and it's Saturday the 8th of March, and we're looking here at the daily chart of FTSE. Interesting action yesterday. We'll look at that in a bit more detail in a minute, just to go through this particular chart as there is some relevance here. And we've been having this sort of ascending triangular type thing, and this trend line, the lower one, is well documented. Bit of a solid break there, but a break back. Retest then and a retest yesterday. Now I think this could be quite critical for reasons I'm going to go into in a minute. The actual wave pattern is not clear. I mean, we had 5 waves down here, as I keep saying. That has yet to be broken. Very, very close. I think it came within 1 point or so, maybe slightly less than that. Sorry, around that. I think within 10 points. I think this was higher at 75. These highs are here around 65. So let's have a switch to. Remember this trend line here, which is critical, as it tends to disappear with this particular pricing service. Well, I'll try and recreate the trend line. So let's say it's something like this. I think the close is just below it. And you'll notice we've got this decline here, which could be kind of either way. It could be an A, B, C, or it's possible as a 5 if you count a 1, 2 up here, 3, 4 there, and then a final 5th wave. This again could be anything, but just check the level of the high. Okay, this one at 67, this is at 66, so we have got a small failure there, trend line roughly there. Okay, so what we had yesterday, or what we had building up, in fact, last week, was an ABC decline down to there, then 5 waves up. And it's looking quite encouraging actually for a buy. In fact, I almost issued a buy signal yesterday. I decided not to first. I'm glad I didn't, because obviously we fell back quite sharply, and probably all been stopped out. That would have been too good. In the event, I was dabbling in a few small positions, but they did get stopped out. I did take some profits ahead of the news. We had non-farm payrolls yesterday, which, as usual, knee-jerk reaction one way, then a more solid reaction the other way. But let's have a look at the pattern since the low here. We're now on a 10-minute chart. Fairly clear 5 waves here. 1, 2, then a 1, 2, 3, 4, 5, then a 4 and a 5. So very clear 5 waves. We then had a sort of almost a triangular type B, then a C wave, followed by quite a nice sort of 5 wave, well, possible 5 wave advances, bit of a pullback, and then the news came out and we started to blip ahead quite strongly, at which point it looked pretty positive that we're going to see a decent move, but 6/8 turned it back and we had a very sharp decline. There was in fact a quick tunnel opportunity. It was too quick actually to send out into anybody, but once we got back to parity, once news out of the way, IG started to raise the prices, lower the risk on selling tunnels. Once it got back to parity, I think the 55s were over 90, quite a good sell. Interesting, if you read the tunnel trading book, which we sell, there are 2 systems. One is based on a percentage move, so we had a move here, and we apply a percentage to see what tunnels we should be looking to sell, and the other is a system based on news. Yesterday we had both. In fact, we had both the percentage calculation triggered a trade, and then there was news also. But the key thing was to sell after the news, not before the news. I have done a video on this. If you have the tunnel trading book and you haven't had the video yet, so please drop me an email. I'll send it through to you, because it's quite an interesting case study actually in what you can do with tunnel trading. That worked quite well. Because this move down here took us down to, well, I mean, about 80 points down. So all the tunnels up to 75, maybe even 80 got triggered down to 0 for 100% profit. Now, the big question now is what happens next. Now, I mentioned that trend line. Let me draw it in again approximately. So we'll assume it's something like this. So we've had the 5 waves up. We've now had a bigger ABC, so we've got an A, B, C, a B, then another C. It may not be over yet, but I think the action on Monday could be fairly critical here. If we can regain this trend line and we see a good buying response on Monday, then we could see a very solid rally developing. The pattern here, we've got this impulsive action. This looks corrective. Of course, it's anything but a corrective here. If on the head we head down on Monday, then that could be a major sell signal. We've tried to regain these areas, we've failed, and we could be going down big time. I mean, it's a mistake to perhaps put too much reliance on one day's action or whatever, but there could be something significant happening at this point in time. So Monday's action, I often say early in the week, early in the session, we could see something this Monday that is worth watching. So if you want to trade the markets on Monday, then it's perhaps an important day to be looking at pretty carefully. You need to have some experience doing this kind of stuff. Action can be pretty fast, and it's not something you really want. It's not something. If you're new to trading, then I wouldn't suggest looking at this too well. I mean, by all means, look at it, but make sure you keep your risk strictly under control. What I'm looking for is some kind of spike, either a buying spike or a selling spike, you could just keep going following this kind of action. So have a look at the DAX now. The DAX is more positive, mainly because we had this ABC here. Difficult to count that any other way, really. I mean, you can do, but it's not an obvious count. Then a pretty strong impulse move to there. Then an A, B, C, A wave, B wave, C wave. Now, of course, C wave may not be over yet, and on the DAX it could go a lot further down and still be a C wave. Not so possible on FTSE because it's already gone quite a lot further. But the similar parameters apply, really. If we break this level here, then that will negate the impulsiveness of this rally here. But a break up to here would be quite positive. So similar, basically the same kind of action. It could be a very important day, Monday, for the DAX as well. So look at the Dow now. Well, the Dow's still lagging a bit. We've still got this possible 5-wave decline. Not a very clear 5-wave, but it can be interpreted both ways. With this possibly corrective rally, I mean, it's not clear at all, but it could be an ABC of some description. Big move down there, rally up. I mean, quite interestingly, although the non-farm payrolls were US yesterday, US-oriented markets, US-oriented news yesterday, they didn't actually have a huge amount of effect in the US in the same way they did on the DAX and FTSE. But again, a similar parameter. This 5-wave decline is a possibility. This could be corrective, so it's possible that next week is be important. We're now expiries in 2 weeks' time, so I wouldn't expect to see any real fireworks until after expiry, which comes on the 21st. But let's have a look at the shorter term action here. In fact, this chart doesn't give you a full picture of the news because the news came out at 1:30 when the Dow wasn't open at 1:30. I'll show you a quick IG chart to show you what actually. No, actually, DAX or FTSE will do, in fact. But you can see that the news, well, appears to drive it up, then down, then up, then down. I mean, it really was. I don't know what the news was, but I can't believe it's so difficult to interpret that nobody could understand it. I think mainly these knee-jerk reactions are traders just seeking to gain some advantage, or bigger traders trying to hit stops, that kind of stuff, set the market up for taking bigger positions the other way, probably, which is why we then see the true move coming later on. But in fact, fairly quiet session, really. Nothing too dramatic on the Dow, nothing really to talk about. We'll just have a quick look at the effect of the news on FTSE. Okay, I mean, the same chart as before. News came out here, so it blipped straight up, and it just blipped straight down. I mean, the fact that the Dow opened at 2:30, which was around here. I mean, although at that point FTSE was well down since the news, the Dow was well up before the news. So although it was still up when it opened, it was reduced than it had been before. Right, finally a quick look at gold. No change here. Looks like me like a 1, 2, possible 3 with a 4 in progress at the moment. So we're still looking for a 5th wave, which I've discussed before, so I won't go into that in huge detail. But a new bull market may be confirmed once we've seen 5 waves. And we've seen some move above here, and then we see it needs a corrective rally. If we see a corrective rally after such a move, that would suggest that there is a new bull market. And obviously the corrective rally has to be followed by an impulsive action to the upside. But the corrective rally would sort of set the scene for that and be maybe the opportunity to buy gold. Great, quite a long report this morning. Hope you found that interesting, useful. Monday morning should be a good day for trading. We'll have to wait and see how it develops. Obviously, it doesn't always work out the way we hope. Risk control is vitally important, and stops should be used as, or whatever form of risk control you use, please use it. And that's all really. Have a great weekend. Thanks for listening, and bye for now.